Hi everybody, this is Eddie Gabor, Managing Partner of Key Advisors Group, and I wanted to send out this educational video in regards to why I think volatility can actually be your friend as an investor, okay? I've always been a contrarian investor by nature, meaning that I like to go against the herd. So when everyone is saying buy, 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 many times that's me saying sell, sell, sell. And then when you have time periods where everyone is saying sell, 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 a lot of times that's probably some of your best buying opportunities. So that's when you may hear me on TV saying we're buying, we're buying, we're buying. Because I am a contrarian by nature, and I feel a lot of times the herd is wrong because they're just following the Monday morning quarterback rhetoric that a lot of times is wrong and too late, okay? And so everyone gets so worried when we see big spikes in volatility. As I've said in prior videos, the VIX is something we watch very closely. And if the VIX is elevated for a long period of time, that's not very bullish from a market standpoint. And by elevated, we mean over 30, okay? If the VIX stays over 30 for a week straight, that's a big red flag for us. But if it hits 30 one day, that volatility that scares the hell out of many investors many times can be your friend, because that's a time for the right investor with the right risk tolerance to buy. Because many times there's an inverse relationship with equities and the VIX. So when you think back, just look at 2021 or just look at the last 2 years, for example. When you've seen huge spikes in the VIX, you many times see the equity market sell off. Now again, if the VIX is elevated for 3 to 4 days, that is not a buy signal in our opinion. But if it goes from 18 to 25 on one day or even just 2 days, and many times we have seen it go right back down to 20 or back to 19, that volatility is actually your friend. The more volatility in the marketplace, the better I feel as an investor. And the reason why is there's a saying that says scared money doesn't make money. And most investors invest based on emotion or what they're seeing on that day. So when there's a lot of volatility in the marketplace, a lot of times those dynamics turn out to be amazing buying opportunities for us as investors. Because when that volatility spikes, it means people are scared. And when people are scared, that is the time to be buying. Again, you have to have the right risk tolerance, and it has to be a good fit for your portfolio. But my goodness, over the last 20 some years that we've been managing assets, and we take a look at the VIX itself, and you think back to every time it's had a 1 or 2 day big spike, those times have been some of the best times to buy risk assets, because again, the herd is wrong. And with today's 24-hour media, I think it plays a bigger role in the emotional side of investing, in the sense that when we have those big 1 day spikes or 2 day spikes in the VIX, the media just really hammers home that, oh gosh, here we go. Here's the start of a bear market. And then a week later, crickets. You don't hear a thing in regards to the bear market. And then they'll flip the other side and say, oh, you should have bought the dip, right? This is why having a process is so critical, to eliminate making emotional decisions based on a 1 or 2 day event. So I believe that volatility is our friend as an investor, because when I see volatility, I know there's going to be lots of opportunities, in my opinion, because I know there's a lot of fear, okay? I believe it was Warren Buffett that said you want to buy fear and sell greed. And what he means by that is when the market is really scary and people are telling you to run the other way, a lot of times as an investor with the right risk tolerance, it is a great time for an entry point. And then when people are so euphoric that they're saying, oh, stocks are only going to go up, they can't go down, a lot of times that is a warning sign that volatility has come down so low that there's only one place for it to go, and that's up. And that's when you want to potentially get the hell out and start lowering your risk. So the more complacent a market gets and the lower the VIX stays really calm at a low level, I actually get more nervous as an investor than when I see these episodic trends of the VIX going up maybe 1 or 2 days, but not really changing the trajectory of where the bull market is going. So I actually like volatility. I think volatility is our friend, and high volatility makes me less nervous than when I see a complacent market. Because when I see complacency, it's like, okay, I know the storm clouds are brewing and it's going to hit us when we least expect it. And so that's it for today. Again, trying to educate you on why I believe that volatility is your friend as an investor.